Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, just after the close on June 7th. Wild and wacky week in the equity markets this week. Monday, by 2 o'clock, Nasdaq was getting hit hard on antitrust headlines. They recovered nicely, growth names recovered nicely, which brings me to a comment I want to make about some terms I use week to week in these videos that we've gotten a couple of emails and calls on, just to give some clarity to. I'll often say that we're currently invested growth over value, large over mid over small, from a relative strength standpoint. What is relative strength? Relative strength we use to try to identify price trends from one security versus another security, an index between ETFs, comparing financial instruments to each other and trying to identify where there's outperformance. So there's been some sectors we've been long and been long since we started this video last September that have shown great relative strength, and I use that term over and over. Software, medical devices, defense. Those are holdings in our US portfolio. Where they really shine is in weakness. Their relative strength actually increases. So as the S&P starts to pull back, we keep a real close eye on our different sectors to see how they trade versus the S&P 500. So it wasn't surprising this week that when the equity market got wind behind its back, those strong RS or relative strength sectors went to new highs today. Software, medical devices, defense. What we'll also do is take a look at the securities, the individual stocks in those baskets, and compare those from a relative strength standpoint on a weekly and monthly basis. This lets us know, when we look at the weightings of those baskets, which stocks are outperforming the others. So where we would be concerned is if we owned an industry where the heaviest weightings in an ETF were showing weak relative strength. That would be something that got our attention from a negative standpoint. Now, is relative strength the be all and end all? Absolutely not. How do we use relative strength to try to identify areas that may be turnaround type of targets? In that situation, we're looking for weak relative strength sectors, sectors that have underperformed the S&P by such a large margin that some of the selling may have worked its way out. Heavy supply, heavy selling weakens a sector, weakens an industry versus a broad index. So an example would be energy. Energy has shown weak relative strength versus the S&P 500. We know that. Everybody who owns energy at this time understands the pressure it's been under. Is there any positives in energy right now? Well, couple. The barrel, oil, be it CL /, which is the continuous future we like to look at, or Brent, is currently trying to make a higher low versus last November, December. That would be a step in the right direction. We'll also try to identify within energy what are some of the areas that we want to concentrate on. Is it oil and gas? Is it broad oil? So those type of relative strength, that type of relative strength analysis tries to get us allocating capital properly in sectors that are working. Have a great weekend. We'll see you next week.